Do good work is not a label, but a way of living. It is the constant and diligent effort to achieve a new level of excellence in one's own life. It is the hidden inner beauty behind the struggle to achieve excellence. It's not perfect, but imperfect. It is the effort, discipline, and focus that often goes unnoticed. The goal of Do Good Work is to highlight that drive. The guests I have on this show emulate this drive in their own special way. You'll be able to apply new ideas into your own life by learning from them. We will also have one-on-one episodes with me where we'll dive into my own experience with entrepreneurship and leadership. Every episode is designed to provide you with ideas that you can apply and grow in excellence in all areas of your life, business, and career. Cool. Well, so today we have Terrell Turner. He is a profitability coach, and we'll dive into what that means and how that affects business. But he is, if you know me personally, we are super nerds. So we love accounting, numbers, finance, but also the key component is giving back to the community, being able to either do that through business or through volunteer or through advisory. So Terrell is actually the youngest member of the board of directors for a university foundation that manages the school's endowment and scholarship funding, which allows over 2,000 students have the opportunity to attend college, which I think is pretty tremendous. He's also the host of a podcast, Business Talks Library, where he makes business, or he simplifies some of the complexities of entrepreneurship. So it's great to have a fellow podcaster on. Terrell, thanks for being on.
Hey, thanks for having me, Raul.
No, absolutely, man. I love the background you got. So Terrell, I really like to dive deep before we go into everything between startups to Fortune 500s. What got you to this point right now and the kind of work that you're doing?
Yeah, so I mean, when I think back to as a person who loved, I enjoyed finance and even as a kid when I took some of those, like you say, junior achievement finance courses, when they would come and do like a week of teaching us the basics of handling personal finances. Like, I always enjoyed those classes, even at a young age. And even as my mom laughs sometimes when, like I said, I started my first business when I was 5.
Yeah.
To where a friend of mine, we used to play at his house, and his mom would make us popsicles. And so I would, instead of eating mine, I would just start selling mine to other kids.
Oh, wow.
So like,
start them young, right?
So she came in my room and lifted up my mattress and saw like all these nickels under my bed.
Dang.
So it's just like, it's just something about, money, finance, and business and understanding. It's always been kind of my thing. And also growing up, I mean, my parents were very, very generous and giving. I mean, whether that was, doing different things in the community. And my father was in the military as a medic. So his whole world was around, like I said, giving, even when he was in the field and deployed to war. It's like, he had to put himself in harm's way to help other people. So that just kind of became part of my makeup.
Yeah, I love that. That's even more, that goes beyond just a job or something. That's more like a calling. Like, you don't do that just because like something's attracting you to do that, because you're going out into the field, like you mentioned. So, I mean, I love that component of giving, that it's more like, it's not that I have to do it, it's that I want to do it.
Yeah.
No, it's amazing.
Absolutely.
Man.
Absolutely.
Well, with finance, I mean, sometimes what I think, and we're not going to dive too much into like, especially what you need to be doing with your finances, but I do want to dive into how you can leverage and understand finance as a strategy. Can you talk to me a little bit more about maybe some frameworks that business owners can use in order to develop a good strategy around their finances? Because I know accounting is looking back in the past, but then finance is like, what can we do in the future and plan accordingly? And those words sometimes can come off as constraint words, like, oh, I'm only limited to what my finances tell me. But how can you use that as leverage and creativity?
Yeah, I mean, I think the first thing is kind of like you said, is just really start thinking about it as finance should not just be giving you what you've already done in the past, or, hey, I need to go get my taxes done, so they're going to take everything that I did, but really start to think ahead. And I know comes up with a bad word that a lot of people don't like to hear is, with a budget. And,
Oh my
and
gosh,
I
you
know,
said it.
and I know that when it comes down to budgeting, I think people look at that as, well, this is going to put, constraints on me and limit me from, the things that I can do. And I
You're
think that there
shackling me with
are,
handcuffs at that point, right? It's
and it's like with that, what I often tell, whether it be my clients or even when I worked in the corporate world and I was working with, other non-finance members, the operations team or the sales team, it's like what the budget does is it just gives us a idea of where we're spending our money. So we're thinking and we're acting in the right direction. And I think that when you approach your kind of your budget with an open mind, it's really like laying out the plan of based on what goal we want to achieve, what resources do we need. And I think that's where I always tell non-finance team members, like, if your finance person is coming to you to say, hey, here are the constraints or here are the handcuffs,
Mhm.
you might not be working with the best finance person, because the way I
Oh, that's
approach it is,
interesting. Okay.
the way I approach it is usually, hey, what do you want to achieve? This is what it entails. Now, if you want to do this, this, and this, then we got to figure out a way to find extra money, or we got to find somewhere to cut to where
We got to
it's
get
really
creative.
the budget becomes the tool to help you achieve the goal that you're trying to get to with a realistic view.
And that's, I mean, I love your framing, because let's say, again, for my creative folks out there listening to this right now, let's say you have a vision and a goal. Like, the first step to any of those is the awareness piece, where you are currently, or if you're creating an art piece, you have to visualize that piece of art first. Same thing with startups and business. And I love the fact that you frame it in a way that it's empowering, instead of, okay, cool, we'll get there, but this is what we need to meet today. And these are the actual quote unquote reality of what we're going through. Right. But I want to dive a little bit deeper in. So you have both experience with finance at Fortune 500 as well as in startups. So when we hit on, let's say we want to get creative to get funding or to get money, how do you ensure that or even to sell a company, right? So how do you ensure that we have a right strategy in place with our financial team or our finances if we're running them, if we're a sole operator? What are some of the strategies that we can employ or take a look at in order to prepare ourselves for our next level of expansion?
Yeah, so I think when it comes down to expanding, the first thing is really understanding, okay, what area do we want to expand? Like, when some companies are looking at expanding, they want to add on more team members, or, hey, they just say, hey, we want to grow our revenue. And I think it's really looking at it, because even with the last company that I worked with, where, we were trying to grow the business by, $10 million year over year. And one of the first things that I said is, okay, all right, I could give you a budget to say, hey, here's how much money you have to spend. But I'm like, let's reverse it the other way around and say, okay, all right, what do you need to grow it by $10 million? Like, how many deals do you need to go close? And I think once you start to think of it that way, we were able then to reverse and say, all right, you need X amount of dollars in marketing to be able to achieve that. So
Reverse engineering every strategy then.
Yes.
How did you budget that out? Because you're almost budgeting phantom dollars.
Yeah. So actually, what we were able to do is look at kind of, I guess, to throw out a technical term like CAC, to say, okay, all right, how many new customers do you need? So how much did it cost us to get, the existing customers? Like, what was the average? And it's like, if you need to bring on 15 new customers, and the average was, $30,000 to bring on the existing customers we have, then it's just multiply the two numbers. You kind of get a round budget of what you need. And then I think that's where, as a finance person and as whether it was a sales team or a marketing team, where we have real honest conversations and say, okay, all right, what do you need to do to get customers to the signing table? And then we kind of just put some estimates around that, to where we're really building up a budget to say, well, to achieve this goal, we need this amount of money. And then I think once you have some very, I guess, say directionally clear strategy, then it gets creative to where whether we go to a bank or whether we go to a private investment
Okay.
company, when you start having those conversations, if you can tell them, hey, this is how much money we need, this is the strategy of what we're going to do, this is where we're going to spend the money, you're more likely to get them to say, yes, I like the strategy,
Because
or
they have
yes, I'll give you the money.
transparency, you have a background, you have tracking that you're on pace. And dude, I absolutely love that, because that's kind of like the frame of thinking that I work with. Because at this point, you're not just a silo in a financial like cohort, like somewhere in the corner office, you know, with sheets. You're actually meeting boots on the ground specifically with, well, what's the marketing department doing? How much does it cost to acquire a customer? What's the average? Because the marketing team, they have to have themselves on lock and ensuring that they have predictability in terms of what's the lead count, what's the cost per lead, what's the show rate, what's the close rate, et cetera, et cetera. Whatever your marketing optimization is, whatever your marketing quote unquote funnel is ensuring that, well, you can actually create predictability. And I love the fact that you work backwards from this is where you want to go. Here's a strategy to get us there. What are some of the, typically, you know, a great plan and a great strategy is a great starting point. What are some of the tips that you would recommend for implementation? Because you actually helped this company expand. Yeah.
Yes, and I think the first thing is definitely being clear on what you want to go after, because that was one of the challenges that I see a lot of startups, and even, you know, we were experiencing at that company, where we were trying to do too many things to where we really had to, I mean, and a lot of them, they were good opportunities to where we had to get comfortable saying no to good opportunities, to say, hey, what are the things we're going to focus on?
Can I pause
Because
you on that sec?
oh yeah.
Because that's a huge nugget that I've seen happen. We've managed through it, but I'd love to know, saying it is one thing, doing it is a different thing, because when you have a good opportunity, you're like, well, I don't want to just leave money on the table. How did you define those parameters within that company? How did you identify what a good opportunity is versus a bad opportunity? So they're two separate questions, but how can you walk us through that? Because I think that's a huge value and an opportunity for us to understand that line of thinking.
Yep, no problem. I mean, and that's where kind of, I guess you say, I get to go back to the nerdy side of my accounting and finance. So where part of it was coming down like
too, man. Don't worry.
On the quantitative side, it's really building out a business case. Like, you know, if we do this option A, what's the revenue that we're going to get? If we do option B, what's the revenue? And then we look at, hey, what's the cost involved? And then we also start looking at, okay, all right, how much of that revenue is like, what's the probability on that? And so we can kind of weigh, like, because nothing is a sure thing. So it's just like, what's the probability of us achieving
like a lotto
that?
ticket. Yeah.
And then when I think the bigger piece that allowed us to make even better decision is when we started looking at what's the cost involved, we started breaking it down to, okay, all right, how much of this cost would be guaranteed we would have to pay that? Like, how much of it would be fixed and how much of it would be variable? Like, we have some room to negotiate, or, hey, if this doesn't happen, then that cost might not come in. Because what I've seen a lot of people do is they say, well, we'll choose option B because it costs us less to do it, but you have to pay all of the costs like up front. And it's just like, if you're trying to manage growth, you don't want to run out of cash too fast. So it's like really looking at the terms, and more of the qualitative side of it is, which option gives us more flexibility as we try to pursue that strategy? Because once we kind of weigh those options, like, okay, all right, numerically, this option actually is going to yield more profit and it's going to require less cash. So financially, that's a good idea. And then it goes back to the qualitative side of, you know, does this option actually give us flexibility throughout the process, or do we have to be dedicated to this for, let's say, the next 2 years? And when we started weighing that in, that plays a role. And then we also look at, do we even have the team to execute the strategy? Like, that became a very big piece of it. And in some of the ideas where we were like, financially, this is the better idea, but we really didn't have the people in place to execute that one. So we ended up going with the deal on paper. It looks like the worst financial, or the deal that wasn't the better financial option. But I'm like, when you look at the qualitative stuff, we had the right people for that option. We had the resources, and it was still a profitable option. It just wasn't more profitable than option
the
one.
other option. And so going back earlier, so I like how you, and again, this is something for our listeners to key in on, is how cost can be both fixed and variable and how you can leverage that to your advantage. And then also looking at the qualitative side. And I do that a lot too. There's a lot of decisions also that you can, or factors that you can weigh in, like productivity, stress, team morale. Does this affect the culture? Because those are things that aren't really easily measured with spreadsheets. And this isn't to say that you need both. You need to measure, okay, what's the financial? Is it going to make obvious business sense? On paper, yes. But what's the cost of the team? What's the cost of the brand? Are we making too many changes? Can we handle it? And is this an opportunity that, if we take on, are we just not going to be able to fulfill on it because we have too much on our plate? Or are we focusing on other things that aren't important? So I think those are important factors to put in play. But I'd like to dive in. Is there anything more that you've seen when it comes to when you have all these opportunities on the table? What are some of the ways that you were able to say, you know what, this is how we're going to say no to these opportunities? Is it by doing these analysis for each one, or is it by having this certain direction that the company wants to grow in? Can you tell us a little bit more how you guys did it?
Yeah, some of it, if we go a little bit deeper, we've talked about kind of the profitability roll up, and then other parts was how much cash does this actually, do we have to invest in now? And how long is it going to take us to get our cash back? Because if you're trying to grow your business, your cash payback is going to be a metric you want to watch. And actually, if you're trying to raise capital from other investors, they want to know, like, how long is it going to take you to actually recoup my cash? And that becomes a very important factor. And then we also look at things, like I said, is the difference between fixed and variable. Like, is this going to require us to make a long-term commitment, or will this be something that we can make a variable? And when I say that, like, do we need to hire full-time staff to support this, or will we be able to use contractors or an outsourced company until we get this thing up and running, and then we can continue forward and manage it in-house? So questions things like that. And I will say also, if you're looking at raising capital, one of the questions that a lot of the investors are going to ask are, okay, if you do this, how are you going to rate your success? Like, what metrics are you going to follow, or what metrics are you going to measure on a regular basis? Are we going to measure the number of new customers, or are we going to look at, hey, what's the average revenue per customer? Or are we going to look at the cost for acquiring new customers, where we start really looking at more of the technical kind of metrics to see, do you even know how to judge whether this is going to be a good idea or a bad idea?
Yeah. So making sure they have your key performance metrics, that then they're actually attached to the bottom line and not just fluff metrics, right? And that can be in any part of, like, fluff or like vanity metrics. That's a popular term.
Yep.
Right. So no, that's definitely a key thing. And when you're working with business owners nowadays, not every business is growing by 10 million year over year, that's an incredible trajectory. But when it comes to, let's say we're working with business owners that are growing maybe 10% per month or 10% every quarter, what are some of the ways that they can ensure that their cash flow is tighter? What are some of the strategies or frameworks that you recommend when you have an upward momentum and you want to make sure that things are aligned so that you don't miss something, let's say 2 years from now, 180 days from now?
Yeah. So one of the things I would say that I've actually been working on with a client that owns a restaurant, and they're kind of about the little less than $500,000 a year in revenue, and we're looking through some strategies on how to grow. And one of the key areas that I looked at is, after kind of looking at their gross margin, which is your revenue minus the cost the cost of delivering, or I guess providing the food. Is we really looked at it and said, do you have products that are below your gross margin, your average gross margin percentage? Because what that tells me is every time you sell that product, you're actually making less money in your business. So maybe we need to figure out, how do you get that off the menu? Maybe that's not a product you need to continue selling. And that becomes, I think, a very, very effective strategy for a lot of companies, because I think sometimes people, when they are selling a product, they're like, oh, people like this product, and you want to keep selling it. And one thing I look at is selling that product beneficial to your business? Because if you're either losing money or the margin is not high enough, you're actually hurting your business every time you sell that one.
And I love that, because that's a strategic view to offer less to still deliver either the same service or the same quality or even a higher quality. But then how do you get to the untangibles, or going with a real example? Let's say I have a service-based business or a company like that I'm working with. We have fixed costs, ensuring that there's profitability on every single client. However, I know there are multiple products that can be offered, and every product is offered based on a profitable margin. How would you go about distinguishing what products or services you shouldn't add based on the financial strategy you just mentioned?
Yeah, I mean, I think when working with service based, and I do the same for myself, is looking at, hey, what is the price that I can actually get for this type of service? And then I kind of reverse engineer to say, okay, all right, if I had to outsource and hire someone else to do this, like, what would it cost me to pay them? And that starts to give me a better idea of, like, hey, is this an opportunity for me to either outsource, to pay somebody to do this so that I could then free my time up to go do other things so that I can bring in more revenue? Because a lot of times with a service business, which is different from, a product business, where with a service business, it's a little challenging to scale your business. You can't just say, hey, I served 5 clients last week. This week, I'm just going to go serve 15, because you have
Put
a
in an order
limited
for
amount of
500,
time.
right? Yeah, you can't.
Yeah.
It doesn't work that way. With human capital, it's like, well, you can't stretch a human too much.
So one of the things that I tell some, have some tough conversations with service providers is, we need to understand, what does it actually cost you? Like, let's, because most people who are in the service business, a lot of times they're the one doing the service. And I say, well, what if we had to pay someone, a contractor, to do the steps that you're doing? What would it cost you to do that? And then let's look to see how much margin is in that, because what we may realize is your price is too low.
Yeah.
And that's one of those things that I see happen a lot, is that service providers will start off with a low price because it helps them get their foot in the door. And as long as they're the ones doing the work, they're like, okay, it's not that big of a deal, I can do it. But I'm like, well, what if you want to scale and you have to outsource? If you have to pay somebody else to do it, you will have zero margin left because your prices are too low. So I think that's one area where we'd have to look at, the pricing it. And then let's say if there's a situation where they can't raise the price, it's like, okay, all right, what other upgrades can you add to it to start getting that price in an appropriate range? Like,
Or even the reputation that you develop, right? With
correct.
reputation and brand increase, there is different demand. There's different, like, pricing is positioning, but I love the fact that you have the analytical view of, well, let's actually break it down and see what's possible and where you need to be based on your current costs.
Mm-hmm. And what I also found is that some of the service providers, to where there may be things that you can do, whether it be adding, let's say, for whatever your service is, and you can add in like a written report that you provide to the client, and you can put in some comparative analysis. And for the client, that may actually, in their eyes, increase the value of what you delivered. Now, the report, the comparative analysis that you're doing on their industry can be, it can be used over and over again, but you create it once and you add that as part of your package of services. It allows you to start to increase your price a little bit because the client is getting more value. And I think that starts to allow you to put your profit for that type of contract in perspective. And I think it is really doing the hard work of a business, of really looking at what are all the types of services that you provide. And if you're spending more of your time on the lower margin services, then chances are you probably need to revisit your business development process and figure out how do you start to target and market your higher margin offerings more. Maybe you need more customers in that category. And I think sometimes you just have to put some limits. If you know that you have, for myself, I know that I don't really make really any money when I do personal finances. Now, I mainly focus on businesses, but I tell myself I have a big heart. I want to help, but I put a limit to say, hey, I can only do 5 of these a month. Like I'm not going to do more than 5 a month. It still allows me to give back, but it allows me not to hurt my business because I know that I make no money doing it.
Have that threshold. And I think there's a few things that you mentioned. The first is back when we were talking about what your services should be, or specifically like one of the things that I talk to, like add-ons that you can have, when I tell clients, like just to be super transparent, like when you're adding the specific services or something that might be valuable to the client, do what the client thinks is valuable, not what you think is valuable. Because a lot of the times what we think is cool, the client's like, who cares? Right. So that's the one thing that I find myself repeating to clients. And you can do obviously market reports or market research reports and understanding where you stand based on perspective of you and current competitors and what the value is that you're doing as a service in a company versus what competitors are doing and how your actual customers view you. And having that self-awareness, against stage one, self-awareness will allow you to either package deals or offers in different ways that the customers care about, or reduce things that don't matter. Like maybe you're doing quote unquote those reports and the customer doesn't even open them. Right. So it's those things that, like you mentioned, reviewing that and ensuring that we're doing the right action so we're not wasting anyone's time. But then the second point that you mentioned here specifically is having that balance of profitability, but also, you care about giving back, which is again why, we resonated and hit it off initially. But specifically, I think not every business owner has to do this, but I really do appreciate and admire the business owners that have thresholds or opportunities where, this might not be a high yielding account, but this is a future I see potential, or I just want to be able to give back to the community. And I think that's pretty valuable, especially nowadays. So it's pretty awesome that you have a framework to implement that into your own business without hurting the bottom line, which is important, because if you're not well, you can't do that.
Yeah, and I think that that's something that a lot of businesses struggle with, where, they want to be generous, they want to give, but then they're like, well, when I look at the hardline numbers,
it hurts. Right?
It hurts. And what I usually work with them is like, hey, let's figure out how much how much generosity can you express? And let's really just come up with a target to say, hey, this is about how much generosity you can do. Like, here's your generosity budget here. Like, you can do this many events, cool. Or, yeah. And I think it allows them to have less stress, and it still allows them to be able to give.
And doing it from a place where they're not forced to, it's something that it actually makes sense, that they get positive PR, that's great. But it's also increasing that for your team. If you do that, like, it might increase the team culture, which increases the productivity, which increases, happiness factors, and that you're actually moving towards something bigger than you. As well as for the community, you're getting recognized as, and again, doing it, not just for the show, but doing it because you're actually caring and, focus about community growth, community focus, impact. So that's pretty awesome, Terrell. Well, for our listeners, Terrell, where can people go to thank you for this episode and see what you're up to?
Yeah, so I spend a lot of time on LinkedIn. So Terrell A. Turner, CPA. You'll find me on LinkedIn there. If you look up any of the hashtag Business Talk Library, you'll definitely, we post regularly, like every single day. We're posting 2 to 3 times a day. And then also you can find me on my website, www.businesstalklibrary.com. You can definitely find us there. And then also for the actual CPA firm, you can find us there at www.thetlturnergroup.com.
Perfect. And we'll have all those links in the show notes for our listeners. Well, Terrell, thanks for being on, man.
Absolutely. Thanks for having me.